Earlier this year, I started a position in a company that I believe is a great long-term business. That company is Pool Corporation, the world's largest wholesale distributor of swimming pool supplies and equipment. Since the initial purchase, the stock actually traded down about 20%. But instead of selling, I've actually added about $200 more to this position over the last couple of months. The stock has rebounded a little bit, and as you can see, I'm still negative 7% on this position year to date. In this video, I'm going to walk through why I've continued adding to this position and why I still believe in the company long term. As always, this is not financial advice, this is simply me documenting my investing journey. Let's first unpack some of the negative sentiment surrounding this stock. A major factor behind the weakness in Pool Corp has been the broader slowdown in the US housing market. Fewer consumers are buying new or existing homes, which means fewer new pools are being built. At the same time, many existing homeowners are delaying large discretionary projects such as building or remodeling a pool due to the continued economic uncertainty. As a result, the construction and remodel side of Pool Corp's business has taken a hit. Additionally, there is some company-specific news that appears to have added some additional pressure on the stock. In May of 2026, Pool Corp announced a fairly abrupt CEO transition, which understandably created some uncertainty among investors as leadership transitions can absolutely impact execution and long-term strategy. So I see two different things contributing to the weakness behind Pool Corp. The first is a macro issue. Housing is weak, new construction is under pressure, and consumers are being more cautious about large discretionary purchases. The second is more company specific with the abrupt CEO transition, and that's something worth absolutely monitoring. And these are two legitimate concerns. If housing activity continues slowing and consumers keep putting off large discretionary purchases, or even if execution under new leadership weakens, the stock could absolutely not perform well. However, when I look at the fundamentals of this business, I do not see a weak business. I see a business that is stabilizing after going through a cyclical downturn in part of its business. Something that the business has actually gone through before if we go back to the 2008 housing crisis when housing activity was basically non-existent. The reason Pool Corp can be so resilient to housing downturns is because 2/3 of its revenue comes from maintenance-related products, which means these pools are already built, they already exist, and they still have to be maintained, and Pool Corp supplies those products. And if we look at just the maintenance part of the business, it has actually been quite resilient over the last few years, remaining flat to slightly growing, which is why I think Pool Corp is starting to stabilize. The maintenance side of the business is held up, which makes up 2/3 of the revenue. And now the new construction and renovation side of the business is starting to stabilize, which makes up the other third of Pool Corp's revenue. In the first quarter of 2026, Pool Corp reported earnings per share of $1.45, which is up 2% from the prior year, and net sales of $1.1 billion, which is up 6% from the prior year. The company reported that the maintenance side of the business is seeing slight growth, while the new construction and renovation side of the business is basically flat. On top of that, the company announced a dividend increase of 4% from $1.25 to $1.30. Additionally, it also expanded its share repurchase authorization to $600 million. And we've also seen reported insider buying activity. Now, obviously, insider buying and a dividend increase does not guarantee anything, and a buyback authorization does not automatically mean the stock is cheap. But when a company is still increasing shareholder returns, authorizing repurchases, and insiders are buying the stock, I believe that's worth paying attention to, and I believe that's a company that's operating from a position of strength rather than weakness. I'm not buying this stock because I think the housing market suddenly rebounds next quarter. In fact, I have no idea when the housing market is going to get better. I'm buying it because I believe Pool Corp is a durable, long-term business that can continue compounding for decades despite the cyclical side of the business facing pressure today. The reality is, millions of pools already exist across the United States, especially in the Sunbelt states where population growth remains and I believe will continue to remain strong. And those pools still need chemicals, maintenance, repairs, replacement parts, and any pools being built from today into the future will need the same exact thing. I believe the reoccurring revenue part of this business once a pool is built is what makes this business so durable. And as a long-term investor, I'm trying to take advantage of a period where I believe Pool Corp has fallen out of favor due to cyclical concerns. However, I believe Pool Corp remains a high-quality, strong business. And that's ultimately why I added $200 more to this position over the last few months and why I continue building this position over time. And as long as the fundamentals of this business stay intact, I have no problem to continue adding to this position and letting time do the heavy lifting. And that's really what the compound journey is all about. documenting real investment decisions in real time, sharing both the wins and the losses, and focusing on the long-term process. As always, thank you all for watching. If you enjoyed the video, consider liking and subscribing, and I'll see you next time on The Compound Journey. Thanks for watching.